Today we're going to talk about my 12 candle rule for the London and New York trading sessions. Stay tuned, traders. We'll be right back. G'day traders, I'm Stacey Burke from Stacey Burke Trading. Last few videos we've talked a lot about the different market maker templates, the stop hunting, the different levels in the market, and then also candlestick confirmation patterns. I've had a lot of feedback, a lot of fantastic emails, and a lot of questions as well. Today we're going to talk about my personal 12 candle rule that I use pretty much for London and New York. Some of the rules around that 12 candle rule session for me and why I use that and how that may help you also to increase your focus time, your focus on specific trade setups, also reduce your screen time, hopefully increase your results, and also get back to why you maybe fundamentally got into trading. That was for lifestyle, and to obviously leverage your time and your trading. And also how the news can affect my rule and some of the other variables that can affect that rule. So what my 12 candle rule is this. We talk about the Asia trading time frame. I don't trade Asia, but how that is used to accumulate orders and how the market makers will reset the initial high and low of the day when that New York rollover occurs at 5 p.m. New York time. When I get to my screen in the afternoon, I have a blue iSessions box on the Asia session, which a lot of people have asked me for that indicator. I'll include the link below. It's just a free indicator. I color code my indicator starting at the first hour of the day. Oh, the marker's no good. First hour of the day. And that goes to 8:45 on my candle charts, which is 1:45 New York time, AM. So that blue box ends there. So in that last third, I'll come to the screen around 2 o'clock in the afternoon in Perth, which is 2 a.m. New York time. And I'll be looking to see how that box is set up. Now some days that range will be 25 to 50 pips for Asia. I look at, has the market pushed up to the top or pushed down to the low with 3 pushes? For example, today the pound yen has already ballooned out 50 pips out of the box. So I'll redraw my box wherever those levels are. But when I come to the market, the first candle of that session then is the 2 a.m. New York candle. So that's when Europe opens. And obviously, in many cases, the market may be 3 pushes up into a high. And as I always say, if the market is, if it usually will end on a session will end on a false move and begin on a false move. And I used to get into these trades up here where I might sell up top and I'd be into a move that would move towards the bottom of the box. And I'd hold on to that. And then that would be a stop hunt, and then they would come back and either do a measured move maybe up or stop hunt this and form an M pattern or just go into a range-bound market. But my 12 candle rule is this. I focus for that 3-hour window on 12 candles from that Europe open. In that 3-hour window, that's my focus time, that I know pretty much every single day there's at least a 25 to 50 pip move that will start either even right off as a stop hunt move, which is 25, typically 25 pips, maybe 20 to more, and occasionally in some maybe level 3 trades where it's going to be or level 1 where it's a straightaway, that may actually even continue and become the move for the day. But in many cases, that first move is a stop hunt move. And so this 12 candles allows me to focus and be looking for specific patterns at these levels, the higher lows of the day. The previous day's low or high, if they are nearby, are critical as well. And ideally, the best moves the best trade setups will often come where a low of the day coincides with the previous day's low or a previous day's high. But whenever the market, as it evolves throughout the day, hits a swing high or low, that is now the most critical levels for potential either continuations or for a move to start. Now, obviously, after a stop hunt, what I like to see is one of these patterns forming, maybe a V bottom or a V top, an M or a W, railroad tracks or pins on either side after 3 pushes outside of the box. But the important part of understanding this 12 candle rule is that that's all you have to focus on. Now, obviously, I'm not talking about not paying attention to the other market structure. What I'm talking about is you coming to the screen with your trade plan ready for that 3-hour window. And typically for me, this first hour is allowing that market to sort of give me an idea of what's happening. The trade setup, for example, last night was a W formation on the pound that came in that last part of the 3rd hour, and it didn't really start to go until the US session. And that's something that will happen as well. Now, one of my rules around that is that if I don't have a trade set up in that window, then I come back just prior to 8 o'clock to do the same thing in the US session. Now, typically after having watched that first 12 candles of Europe and London, I'll already have an idea of what potentially may be setting up either for a continuation move or a New York reversal trade setup based on what's happened in the London session. Now, we've talked about the other stop hunt patterns, the spike high, the spike down, and then also the double move to the downside. So these are little things that will give you some insight as you head into the New York session. One of the things that can change that rule for me is news. So depending on the news setup, that may push my window. If the news is going to be at 5:30 Perth time, which is 4:30 New York time, I may wait and not really pay attention in terms of looking for a specific setup prior to the news. The one thing that I look for with the news is for it to complete patterns. Often the news will accelerate or capitulate an existing pattern that's there. So if I have an M or a W formation that I think could be the high or the low of the session heading into the news, and it's rock solid based on my specific setups, then I will enter the market and look for the news to complete my measured target. If there's nothing there prior to the news, I may look for something that will eventuate in a V bottom or an A top setup with 3 vectors where I may look to enter the market after the blow off of that news event. So again, I still use that 12 candle rule. If the news is at a certain time in the US, I'll back that up 8 to 12 candles before I come to the screen. The whole purpose of that is for me to reduce the screen time and increase my intensity and my focus and hopefully my results when I'm at the screen looking for very specific setups in order to capitalize from those moves as quickly as possible without being at the screen. So if you think about it, talking about leverage, we talked about building your playbook in the 7-step daily routine for high performance traders. If you haven't done so, go to my homepage, download that. It's an audio file. One of the key components of that daily routine is building your playbook. And really what you're doing is building the market maker's playbook. If you start to identify these setups that consistently show up in the market, then the next step is learning how to trade them under pressure in live time and how to get the best fills, how to know how to hold on to those trades, when to go to break even, how to set your targets, and then also how to manage that process and increase size in doing so. So hopefully you got some value from today's video, traders. 12 candle rule for me that just allows increased focus time, really intense specific setups that we're looking for in the markets that can ideally give us potentially an asymmetrical risk-reward opportunity with measured targets, and then also reducing the likelihood of us taking random or haphazard trades that actually do damage to our overall results because they don't go anywhere. They take psychological energy out of you and they damage your psychological capital. So stay disciplined, traders, stay focused. See if the 12 candle rule will help your trading. We're going to expand on a couple of things in the next video. Again, thank you for all the great feedback. Keep getting better, traders, and may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.